Okay, guys, the weekly jobless claims are coming out right now, so stand by. Let's take a real quick look at the dollar yen. And what's the market looking for today? No one's even paying attention today. 271,000, and we got 259,000. So really, that's a damn good number. But who the hell's paying attention? You know. It's a big drop in expectation. So, I mean, dollar yen theoretically would be spiking up right now, but no one cares. I mean, the last thing anybody's thinking right now is Brexit, unemployment claims. Only thing that's on traders' minds right now is a Brexit vote. That's it. So, yeah, I mean, should the dollar be stronger based on that news? Realistically, yes, but nothing gonna happen. Nothing gonna happen here that's gonna really move the needle. Okay, so with that being said, let's take a little bit of time, and I really want to talk about like some of the bigger moves that could happen with a Remain or Brexit type of situation. Now, I hate to just leave you guys with the idea that there's absolutely no risk in a Brexit at this point, because there is. I really think that the risks have diminished quite a bit, but in the event there is a Brexit, okay, and I say that in the event there's a Brexit, what I'd been looking at with the U.S. dollar Mexican peso was the potential of a move past 120 or 20, excuse me, 120. Above 20 pesos. If there's a big risk-off move, meaning that the UK votes to leave, and I land in Hawaii and I turn on my my news, and I look at the markets, and I realize that the UK decided to leave while I was flying. I would expect that the U.S. dollar Mexican peso spikes all the way up towards 20, if not beyond 20. All right. Now, ultimately, I would like to be on the short side of the U.S. dollar Mexican peso, somewhere up here. Unfortunately, based on the recent sentiment of the markets, I doubt that's going to happen. And a Remain, okay, a Remain will put the U.S. dollar Mexican peso 17 back in view, in my opinion. This is going to be one of the more wild currencies to trade because it will move fairly aggressively. All right. And I would think that we are probably going to make a move like this back down towards 17 before bouncing. All right. That's the way I view the U.S. dollar Mexican peso. Now, I really want to talk more about the cable because, when it's all said and done, with the pound, okay, what's really changed here? Nothing. And unfortunately for the UK citizens, nothing's going to change. And you're going to be more tied to the Euro zone more now so than ever before. And so my view is that any move. Now I'm gonna highlight this right here. Okay. Okay. My opinion is that any move up towards 151 to 152, this is going to be your opportunity if you guys want to sell the cable. After the referendum, I think we could trade up here. Now, I've been reading a lot of bank reports too that think that we could make it all the way up to 156, somewhere up here, which is possible. But what I want to point out here is this 151 is the 38% retracement of this entire move, right? Now, one of the things that also has me thinking about all this is that we've had such a massive move off the lows. Okay, if you think about what's happening here, is we've had such a massive move off the lows. The question that comes to my mind is, how much further can we go? You know, we've had a nearly 1,000 pip rally from 140 almost to 150. I mean, you can roughly say a 900 pip rally. 900 pips in a week and a half. I would have expected that move once the UK decided to stay, but obviously the market's been pricing that in ever since Jo Cox, the member of parliament, when she was murdered. You know, that turned around sentiment big time in the cable. Okay, and I expect that on a stay vote, once we can confirm that the UK is staying, we're probably going to rally up towards here or maybe here and then show a reversal. Okay. Unfortunately, a lot of the money has already been made on the long pound. You know, it's kind of like, you know, you're at the tail end of the move, I think, trying to buy it up here. That's why there's no way I could chase it up here. There's just no way. It's not humanly possible for me to just continue to buy the pound. All right. Now another beneficiary of the of a Brexit, or you know, a stay, remain, not a Brexit, but after the vote, is the euro. I think the euro can make it up to 116 based on this triangle. Okay, based on the triangle pattern, the breakout can take us to, and you know, I have it drawn out here, to take us to 116. Now, do I think that's possible? Absolutely. I think a rally to 116 is possible. I think a break above these highs right here, just enough to squeeze everybody out, is possible. But I also believe that once the UK votes to stay in, that opens the door for the Federal Reserve to possibly raise rates in July. You know, as long as the jobs report is not a disaster, if we can create 100,000 jobs and, you know, wage growth looks like it's still increasing, you know, I think the Fed raises rates next month. So any move up here towards 116 or maybe 116.50, maybe even 117 or somewhere close to here, is going to be an opportunity to be on the short side of the euro. All right, that's following a remain. You know, if there's a Brexit, guys, you just have to know that there's going to be a lot of money lost, and there's going to be a lot of big reversals. I mean, you know, the euro will automatically be down at 108, and we might even trade down to new lows in the weeks ahead. That would be a huge, devastating blow to these European currencies. But again, I'm not expecting that. Not at this point. All right. You take a look at the Kiwi. The Kiwi's been on a rampage. I think the Kiwi goes higher. Risk on, you know, risk on. Stocks continue to rally. You know, the Kiwi will continue to rally. Commodities, you know, some of these harder commodities might continue to rally. Precious metals will sell off, but the Kiwi might actually rally towards 75 cents. It might actually rally all the way up to, you know, you take some of these previous support levels, you know, these are all doable here. This is going to be a big one right here. You know, anywhere between 73 to maybe all the way up to 75 cents. I mean, these are all, you know, very doable prices for the Kiwi. All right, and frankly I'm happy. Let it get up there, because the higher it goes, the better it is for a short, in my opinion. Okay, the Aussie is a very similar situation. I mean, we could get a rally all the way back up to 78 cents. It's very possible. Let it, you know, let it get up to 78 cents. That's probably a good place to look for shorts. The yen. Now, on a Bremain vote, okay, you have to imagine equity markets, the S&P, we head to 2200. We hit new highs. We squeeze out all the shorts. We enable new longs to get in the market, and the dollar yen spikes up towards 108. I think 108 is going to be a big, big, big resistance. Okay. I think it's going to be a big resistance moving forward. Okay. So if we can make it back up to 108, that might not be a bad place to be on the short side. If you guys are looking for short dollar yen on a Bremain. Right. Now, the other thing that I think is quite possible, and now that I've got most of you guys here, you equity market traders, what I think is really possible, and I want to work through this with you. Oh man, some strange sound just went through my computer. Here's the E-mini futures. On a Bremain vote, Bremain means the UK stays in the EU, which I think is going to happen. I believe that equities move to new highs. Now, why? There's a couple reasons. If you've read any recent, over the last several months, or year really, all the money that has been moving in the sidelines, what's happened? Well, you have investors, mom and pops, that don't trust the market at this point, right? They've been selling into this rally. They've been moving into cash. There's been more redemptions in the last year than I've seen in a long time, like historic amounts. So people are just, taking money out and exiting. Now, what happens if you break into new highs? Well, you've got like institutional clients that are like, well, listen, I don't want to deploy all my money right now because, we got to get past this Brexit vote. You got mom and pops that have been, selling into the rally over the last year, kind of selling up at these levels, taking profits off the table. What happens when you push into new highs? You push into new highs, all that money gets redeployed, right? Institutional traders say, I'm going to get back in. Mom and pop say, oh crap, I'm going to miss the next rally. So they get in, and all the shorts, anybody who's been shorting up here, they're going to get squeezed. So you let the shorts get squeezed. You let the mom and pops get back in, the retail traders, retail investors. You get institutional traders wanting to redeploy cash. And once you do that, you get high enough, maybe 4 or 5 percentage points above the highs, and then that's when the market looks set up for a reversal. Okay, and I think that you have to let the markets actually hit new highs, and I think that we hit 2200 in the S&P, and then from there, again, my 2 cents is nothing's changed. And what's going to make it even worse for the equity markets moving forward is the Federal Reserve is going to start raising rates. They're going to start extracting liquidity from the markets, continuing to extract liquidity from the markets. And so what we're doing is we're going, to hit new highs before reversing. All right. And we have to play that accordingly. If the stock market hits new highs, you got to imagine, what does that do to the Aussie? Well, the Aussie might be trading at 77, 78 cents, 80 cents. The Kiwi could be trading up at 75 cents. The dollar yen, 108. The euro dollar, 116. The pound, 152. And then once we get up there, that's when we start looking for, the reversals. Because I have always been in the belief, and, one of the things that's always kept me, I want to say safe, it's not really the right term I want to use, but one of the things that's kept me alive over the last 20 some odd years of trading is that I know that the market likes to screw as many people as possible whenever it can. The biggest screw job in the world would be, at this point, getting everybody long, all the shorts squeezed, and then performing a false breakout maybe on a monthly chart and reversing back down towards support. That would be the biggest screw job you can imagine. Because then you know, imagine mom and pops, the retail investor, you know, the empty nesters that are semi-retired sitting at home watching CNBC, or the people that are, you know, living off their pensions, and they, you know, I hate to say this, but, you know, it's people that, you know, are like, oh my God, you know, I'm not making any money in savings, so I gotta be in the markets. You know, I just don't make enough money from my savings. I have to redeploy my, you know, back into the markets again. You know, those are the people that get screwed. You know, and it's the retail, and once the retail piles back in here, that's probably where the market's going to reverse. So, and again, I hate to say that. I'm not saying that with a smile on my face. It's just but it is what it is. You have to, you know, if you're going to play the game, you can't hate the game. You have to understand the game, and so I think that's where we're headed. And I do think that, and I have thought all along, that when the UK voters, they're in the ballot box, most of them will, you know, it was said best the other day by the guy on CNBC, most will vote with their head, not their heart. And although I think that most UK citizens believe in their heart that they would be better off out of the EU, I think in their head they believe that, you know, let's not rock the status quo. Let's, you know, keep things the way they are. I read a stat. This was interesting. I want to share this with you, and maybe you guys can confirm it. In the debates, one of the talking points was, you know, when the UK entered the Eurozone, they were the UK was the, and this is back in the Euro group or whatever. The UK was the least productive of the European countries entering the Eurogroup, right? At this point, the UK is the highest producing country in the EU. And so when you look at that stat, you know, that stat alone would, you know, if I was a UK voter, I would be thinking, well, you know, hey, we're doing better now than we were, you know, when we entered the EU. And we're doing better than everybody else in this environment, so why change, you know? So I think that could really sway a lot of people towards the stay. All right, guys. So anyway, just some ideas for the next week. I hope you guys just please play it safe. Remember, over the next 24 hours, it's going to be volatile. It's been volatile already. It's going to continue to be volatile. Take smaller positions. Don't overextend yourself. Be careful of trading the euro or the pound or the yen or the dollar, anything that has to do with those. You guys know my open positions are long Aussie New Zealand, long Aussie Canadian. Those are fine because they're commodity crosses. They should be fairly insulated from a Brexit or a Remain, you know. But once you start adding a dollar to the mix or the yen to the mix, like an Aussie yen or, you know, Canadian dollar, you know, US dollar Canadian, euro Canadian, you start adding the euro, the pound, you know, that's when you start to get a very volatile mix of what could be extremely crazy. So whatever you're doing over the next 24 hours, please do it carefully. Please take some small positions. Don't let your losses build up. You know, try to cut your losses short. If you have a nice gain, you know, taking some profits along the way makes sense because things are going to be very volatile. They're going to move up and down. And please just be safe, okay? Because I don't know how many other people are going to tell you to do that. So I feel that it's at least, you know, I need to tell you that. All right, guys. Let me answer some questions really quick. I've got 10 minutes. I want to spend a little bit of time answering some of your questions. Kate says, what was the outcome of your Twitter poll, Blake? My Twitter poll showed Brexit at like 58% or something like that. I have to go back and look. But it was a, let me see. It was a, here, I'll take a picture of it because I don't know how to grab it from here. So this is what it, this is my poll final result was 57% voted for Brexit, 43% voted for Remain after 423 votes. So that's what we got. Now again, it and I do think that the anybody who's you know, Twitter finance people are going to be somewhat swayed towards the Brexit. I've said that all in all. Thomas says, good morning, Blake. Hope all is well. Everything's great, man. Everything's going to be much better when I have a pina colada in my hand. Visha said, hey, Blake, would you take a look at the Swissy at these levels, taking out the lows from June? We already looked at the Swissy, so hopefully you got that. Vlad says, Blake, could the 1,000-point DAX, 1,000-pip pound run-up be the Remain trade and the last push-up tonight, the hedge unwind, considering hedge funds conduct their own private exit polls, etc.? Yeah, I think the run in the DAX, and by the way, we should probably go take a look at the DAX. For those of you that trade it, so the DAX is going to go right into resistance, I think. So here's the DAX. Here's the daily. Here, let me remove this because I drew this out yesterday, but it's same thing. If the S&P, breaks into highs, I think the DAX is going to break into highs too. We're going to run right into a wall of resistance around this 10,000, 10,600, somewhere around here. That'll be interesting if we can get above that. But I think that's where the DAX is going. DFS is exclusive. Barclays ceases to accept FX stop loss orders before the UK results. Wow. That's crazy. Way to go, Barclays. Way to run a good shop. Visha says, I took the Euro Yen at the 618, Blake, 120.84, targeting 115 lows again. Really? Euro Yen? At 120.84. Well, probably not too bad of a price. I mean, obviously you got a decent price already, but I could see. I think you got to let it go all the way up to 122, possibly. See, I'm just trying to think ahead a couple of days. That's how I would trade the Euro Yen if it were me. Then again, I'm not trading. Ha! I'm out of here. Milo says, hey, Blake, is it worth considering Euro Aussie now? Have a great holiday. I don't know. Obviously we've looked at this a couple of different times. So we're at the 50% retracement. I don't know. I really don't know how the Euro Aussie will respond here. My 2 cents is risk on is good. The Euro Aussie is going down. That's my initial gut instinct call. Stocks go up, this thing goes down. If I was going to play the Euro Aussie to the long side, what I would do personally is I'd just wait for another dip like this. Play it on the long side down here at the low 140s, or the mid 140s rather. Chin asks, where am I going for the holidays? I'm going to Kauai, Hawaii. Yeah, I got somebody staying here at the house to make sure that, you know, the pool stays filled up and, you know, the house stays intact. And I'm going for a week. I'll be in Kauai. I just hope this teenager doesn't, you know, I say teenager, young adult doesn't throw a party at my house while I'm gone. That's my biggest fear at the moment. Nick says, hey, Blake, is that a bearish Gartley on the dollar yen? 4 hour completing now at 107, 105. Bearish Gartley. Okay, let's take a look, Nick. It would be close to where we're at right now, apparently. Let's see. Bearish Gartley. Things ripping. We're hitting new highs on the dollar yen. Holy Moses. I don't think so, Nick. If I can't immediately see it looking at this chart, then I don't think it is. Usually I can pick up on them pretty quickly. Matt writes in, hey Blake, is that a cup and handle pattern on the 6J? Did I just pass? Oh, there it is. Okay. The price has come back into former resistance now, support shown on daily and weekly. Is that in conjunction with the Nikkei retesting the underside of the trend line? Looks scary. Now this could be, let's go over to weekly. This is actually, I see what you're saying. I think this actually could be resistance over the next couple of months, like that. Possible, you know, resistance. Dimitri said, hey Blake, the Swiss strength in contradicting the equities behavior is puzzling. Have a great holiday. Cheers. I don't think so. I think the Swiss strengthening is not really the Swiss strengthening. Because if you look at the Euro Swiss has been spiking higher. So this is the Swiss actually weakening. If you want a good read on the Swiss, you have to look at it from the Euro Swiss standpoint, not the dollar Swiss standpoint. Okay. Patrick H says, good morning, Blake. The day is finally here. Thanks for preparing us. Hope you have a great trip. Aloha. Thank you, Patrick. I'm going to end up missing so many questions, guys. I'm obviously going to be, and I'm not going to be here for lunch money. So I'm going to be turning it over to Kip in a couple of minutes. Because I'm not going to be able to answer any more questions, I just want to tell you all, you know, please be careful. Dollar yen, almost at 106. Please be careful. Please be safe. Please, you know, don't take any unnecessary risks. The next 24 hours are going to be extremely treacherous. They're going to be, you know, whatever you're doing, just do it in a quarter size. You know, if you can. You know, if you normally trade one lot, trade a quarter of one lot. You know, if you normally trade 10 lots, trade 2 lots. Trade in some smaller position size so you can withstand the volatility that's here. All right, I always say it's coming, it's here already, and just be very careful out there. I will be tweeting pictures from Kauai, and I will be obviously monitoring the markets from Kauai as well. I'm going to try to stay off my electronics as much as possible, But I'm obviously going to keep a beat on what's happening because I do have Aussie Canadian and Aussie New Zealand longs still in play. But I want to wish
You mean you're
what?
not going to be doing your show from Hawaii, Blake?
No, sir, Bob. Nope. Will not be doing. Anyway, yeah. So anyway, you guys have be safe. Take care. And by the way, tomorrow morning with Chris Asaro, make sure you're tuned in to the London Calling webinar, which will be late tonight. Make sure you tune in there because there's going to be a lot of volatility around the UK vote. Chris is going to be broadcasting. Paul Franco will be broadcasting tomorrow morning. Make sure you're listening here and always listening to Kip, right?
Yes, thank you. Yeah. Well, so when are you flying out?
I'm flying out in a couple hours, so I got to wrangle up the kids and,